Anshul Saigal joins us. Let's connect with him and talk markets. Anshul bhai, good morning. इस बार जोर का झटका जोर से लगा है. नॉट जोर का झटका धीरे से लगा है. मिड एंड स्मॉल कैप्स में जोर का झटका जोर से लगा है. बहुत जोर से लगा है. आर वी नियरिंग अ बॉटम इन स्मॉल एंड मिड कैप स्टॉक्स और झटके का इम्पैक्ट चलता रहेगा?
Nikunj bhai, good morning. I'm reminded of a rustic Punjabi quote by Gyani Zail Singh, our erstwhile president. He used to say that Punjabi jananiya, which is Punjabi ladies, ऐसी होती हैं जो कि गांव में रहती हैं, वो ऐसी होती हैं कि उन्होंने घूंघट भी निकालना है और आंख भी मारनी है. दोनों चीजें नहीं हो सकती. एंड वैसा ही रिटेल इन्वेस्टर मार्केट में ऐसा होता है जिसको अपसाइड भी चाहिए और मार्केट में करेक्शन भी नहीं चाहिए. वो हो नहीं सकता है. ये करेक्शन जो है, this correction in the market was much required. It was becoming so easy for the retail investor to make money. He was thinking that he'll invest in a stock and in 6 months it will triple. That sort of mindset needed a break. And the last 4 months have given that. This is very healthy. This is healthy for the markets and it's healthy for the next leg of the growth in the markets. Also, if you look at the economic activity, since COVID, we've been at breakneck speed. Even on that count, we needed a breather. And this period has given, last, say, 2 quarters have given us a period where we are kind of taking a breather on even economic activity. That also sets the platform very nicely for future growth. In the context of where the world is and where Indian expectations are, say 6.5% GDP growth is expected to be in Indian quarters is expected to be a sort of a disappointment. But if you look around, we are in a very sweet spot at the size that we are, and 6.5% kind of GDP growth, even if it is cyclically low, is quite robust. Even the numbers that we are seeing, as you were, your analysts were showing a little while ago, it's quite clear that numbers are mixed. It's not like numbers are a wash through. And so on all those counts, there is more reason to be now with the correction. There is more reason to be constructive than not. And if you're a long-term quality investor, you should rejoice this correction rather than be wary of it.
Okay. So where are you shopping? Have you started shopping already?
Yes, I have. I must say that I have been buying of late, and I must say also that rather than look for particular sectors, etc., my thought process at this time is that I will stick to quality. One is that. Second, I will look for pockets where there is growth. And that could be in across sectors. It doesn't have to be in any individual sector. And of course, thirdly, I will look for reasonable valuations, which in many segments of the market, that has arisen. So just to give you some instances, if you look at the alcohol beverages space, there are very interesting opportunities there. You have opportunities of margin expansion and hence upside in earnings. You have opportunities where there are special situations that certain companies are hidden in a larger business, which has very different economics, and this company is hidden within that, and so it is getting lower valuations. At some point, just like the ITC demerger, this company will get demerged, and as a result, valuations will be very different for the business. So alcoholic beverages look very interesting. Financials, both private sector as also public sector banks. And if you look at some of the NBFC results, those have been stupendous. In fact, AUM growth has been north of 20% in many instances. That looks quite interesting to us. There are, of course, stock-specific opportunities, whether it is in defense or it is in power and related sectors. Multiple opportunities have arisen at this time. And I'm for sure this is a time when I'm rejoicing and shopping.
Okay, that's great.
Anshul bhai, this whole narrative that get out of small cap, move to large cap, get out of mid cap, move to large cap. Is there merit in doing it now? Is there merit in thinking like this, or there is no merit in this thought at all?
I wouldn't say there is no merit in this. I mean, moving from one segment to the other, I don't think that an investor should be thinking like that. You could get high growth companies in large caps and you could stick to those and you will make money. As well as you could get high growth companies at reasonable valuations in small and mid caps and stick to those and make more money than large caps. So it isn't an either or thing. It is picking your segments, picking your comfort zones and buying opportunities there. So for instance, we know that in cement, there has been significant consolidation. If you look at recent results, results have been reasonably okay, in line with expectations, and the commentary has been positive. Now, with the consolidation, most quality companies which are going to show growth are going to be in the large cap space. And so sticking to large caps in cement may make sense. However, if you look at certain other sectors of the market, say capital goods, etc., there we are seeing significant growth in the small and mid cap space, and companies which have quality businesses and have quality upsides, significant upsides from here, have seen meaningful corrections. Valuations have become reasonable, and so if you are picking opportunities there, then even small and mid cap capital goods companies will make you a lot of money. So it is about picking your pocket segments of the market. It isn't about sticking to large cap or mid cap. I don't think that sort of a strategy will work, because there will be large caps which will make you no money, and there will be small and mid caps which from here can make you multiples in the next 2 to 3 years. So do your research and identify quality businesses is what I would say to your viewers.
Interesting. But Anshul, what within cap goods would you pick out right now?
Just repeat that. I lost you a little, Aisha, please.
No, nothing. I was just wondering why cap goods, and what within capital goods would you recommend to buy right now?
Aisha, there's, capital goods, in our judgment, they witnessed a lost decade sometime between 2012 to 2022. In that space, in that year, that decade, they really lost a whole decade in that phase where there was no growth. There was a lot of competition, working capital swelled up, and as a result, the stocks really went down. From there, we've seen somewhat of a revival. In fact, I shouldn't say somewhat, it's been quite a revival between 21 and where we stand today. That is because the markets believe that there is going to be significant capex, and because of Government of India's policies as regards production in India, as also production linked incentives that the government is giving, there is going to be significant capacity creation going ahead. Much of this will be also in the renewable space and new technologies. Now, many of these companies got re-rated. They've come off late from heady numbers. And as a result, valuations have become more reasonable than they were, say, 6 months back. We expect that the growth in this space is going to remain. And for the next 5 to 10 years, this is a space which will see significant tailwinds. And as a result, it becomes quite attractive as a whole. The sector becomes attractive as a whole. Within the sector, there are very interesting opportunities, whether there are opportunities in cables and wires, or upstream opportunities in companies that cater to cables and wires. There are opportunities even in transformers. There are opportunities in EPC companies which cater to capital goods companies. So opportunities across the board is what we see. Defense, of course. Defense, again, there are certain opportunities which are well appreciated and which have unlocked value. There are other companies which are, again, special situations hidden in other businesses, and where we will see demergers going ahead and value getting unlocked. So there is a whole lot of opportunity in the capital goods space.
Anshul, what about this entire capital market theme? The likes of an MCX, Motilal Oswal, other asset management plays. Do you think they will continue to hold up well?
Aisha, this is a very interesting space in the context of financialization of savings of India as a whole. Now, generally, one would think that financialization would happen through banks, but it is also happening through these capital market plays. Whether it is on asset management side or on wealth management side, these pockets are seeing significant tailwinds. Now, these are businesses which are high ROE businesses, and where the growth trajectory is quite significant going forward, because India is becoming wealthier, and as I mentioned, there is financialization of savings. In that trend, it looks like this is a very interesting space to be in. But we have to bear in mind two factors. One, that this is a capital markets play, which means that when capital markets are volatile, the inherent volatility in this space will be significantly more, because they are leveraged to the capital markets. That sort of volatility will not be seen in the banks, because they are not linked to the capital markets. Secondly, that just like any other stock, this is a space also where valuations will need to be kept in mind. How much of future expectations are built into stock prices that you can't let go sight of, and in that context, if they become expensive and most expectations are built in, it's not a time to get in and seek safety there. So there was, say, in the last 2-3 months, a sort of heady competition to get into these pockets, and so valuations had gone up meaningfully, from where there has been a bit of a correction, because their most expectations were built in. At this time, they look more reasonable. But again, one will have to be cautious, because it's not like they are cheap. They are reasonable in context of where they were recently. And if you're a 3-5 year investor, clearly they are good bets. But if you're a short-term investor, you've got to be cautious.
Anshul, what is your take, especially on the defense names? Have we hit the peak already? Does it seem like this is a cyclical slowdown because these stocks were really overheated? Or do you think the entire structural story is getting challenged somewhere?
Aisha, I recall that in 2021, December, the largest missile manufacturer in the country, which is a PSU company, that used to trade at somewhere close to 3,000 to 4,000 crore market cap. And it had revenues expected in the next year of somewhere in the region of 3,000 crores. So it used to trade at one-time revenues. Fast forward 2 years, and revenues have disappointed. Revenues remained in that range of between 2,000 and 4,000 crores, while the stock is up to 50,000 crore market cap. So clearly, with this kind of an uptick in valuations, much of the expectations are already in the price. Having said that, if you look at the price action, now this stock had gone up to somewhere close to 1,500 to 1,600 bucks at the peak of the rally, which was early last year, from where it corrected to around 1,000 rupees. And despite the recent correction in the markets in general, the stock is up to about 1250, 1300 bucks. Now that tells you that there is the price action tells you that there is strength in this business, and that there is strength in the expectations of this company. So I'm somewhere in the middle. While I don't think that these companies are cheap, but I also believe that these companies, given the geopolitics around us, and given so many wars happening, of course, we've seen Trump come in and assuage some feelings on the wars aspect. But still, it's a very nervous world. And in that context, there will always be positive sentiment towards defense. As a result, I'm somewhere in the middle. Valuations are expensive. However, the total opportunity size is so large that if there is a war, or if there is an inkling that there can be a war, the upsides on earnings can be quite substantial. So stocks will have to factor that in, and which is what prices are telling us.
All right, Anshul, with this, we'll let you go on that. Thank you so much for taking the time out and speaking with us.
If you like this video, then like, share and subscribe to ET Now.